Income investing can for sure get complicated at times, but what if it doesn't have to? Hold on to your seatbelts, folks. This is going to be a good one. For those of you not familiar with income investing, it is all about building a portfolio that generates regular, reliable income in the form of dividends. This is often referred to as passive income, and it can be the best way to help you supplement your lifestyle in those retirement years. Of course, some young investors love those dividends too. There is nothing wrong with supplementing your total return portfolio with some pumped up dividends for sure. Some of the best ways to create income is with ETFs that have been designed for that very purpose. You can almost say they have income generation in their DNA. So, how do you turn an ETF into a money printer? That is where it gets interesting, as these ETFs will employ a little thing called a covered call to help them enhance their dividend payout. Covered calls involve selling call options on stocks held within that ETF, allowing them to generate extra income from the option premiums. Another way some income ETFs will boost their income is by using leverage. This basically means they borrow funds to invest more, which means you make more or, well, lose more if the market is falling. I do need to point out that during a stronger bull market, some of that upside potential will get capped with covered calls. Now, mind you, that's a bigger concern for your total return, and it's really not a huge concern when you're looking at simply the income coming off of those ETFs. Did you know a sub to the channel is the best strategy to beef up that future content? For today's video, it goes without saying that I was looking for some high dividend payers. In addition to that, I was also looking for ETFs that have been around for 3 or more years, and that did eliminate a lot of the newer leveraged-based ETFs. Of course, any of the ETFs in today's list that do have a leveraged version, I have given them a slight call out for you, just in case you do want to look in that direction. I was also looking for ETFs with positive total returns for the 1 and 3 year time frames. I have to say, I am pretty happy with the bunch I found. So without any further ado, let's do this. Kicking off this list, we have the Global X S&P TSX 60 Covered Call ETF with the ticker of CNCC. This ETF is designed to provide exposure to large cap Canadian companies, and they utilize, of course, a covered call strategy to increase those payouts. At the time of recording, their current price comes in at $12.55. They have an NAV of $12.49. Those assets under management, they're coming in at $84.35 million. They also have a beta of 0.86, so they are slightly less volatile than the market average. Looking at their fees, they have a management fee of 0.39%, a management expense ratio of 0.50%, and with this one, they also have a trading expense ratio or a TER of 0.35%. In this case, they are not including that TER within their MER. So that is an additional expense as well that will come with this one. Looking at their dividends, they have a yield of 9.562%. It is a monthly dividend of 10 cents per share. Their 5-year average dividend increase, that comes in at 20%. So that's not too shabby. Looking at their returns on their 3-year return on investment, that comes in at negative 7.86%. Factor in the dividends though, we do get that positive total return I'm looking for, 14.01%. On their 1 year, their return on investment comes in at 6.99%. Add in the dividends, we do get a total return of 17.22%. Their top 3 holdings include Royal Bank, TD Bank, and Brookfield Corporation. If you are not opposed to even more risk, there is also a leveraged version with a ticker of CNCL. Coming in at number 4, we have the Global X Canadian Oil and Gas Equity Covered Call ETF with a ticker of ENCC. This ETF provides exposure to Canadian oil and gas companies while employing a covered call strategy to pump up their dividends, as well as the oil. At the time of recording, their price comes in at $11.35, and they have an NAV of $11.34. Those assets under management, $467.70 million. they've got a pretty volatile beta coming in at 1.75. So that, of course, means they're 1.75 times more volatile than the market average. Looking at their fees, they have a management fee of 0.65%, a management expense ratio of 0.76%, and this is one of these global X ones, so they do have that trading expense ratio of 0.21%. Looking at their dividends, they have a yield of 13.744%. It's a monthly dividend of 13 cents per share. The 5-year average dividend increase on this one is 80%. Holy banana bread, that's really good. Looking at their returns, on their 3-year, that return on investment comes in at 36.42%. Factor in the dividends, we get total returns of 87.90%. Looking at their 1 year, that return on investment comes in at 3.37%. Add in the dividends, total return 17.58%. Their top holdings include Imperial Oil, Suncor, and ARC Resources. This one also does have that leveraged version with a ticker of ENCL. Taking our third spot, we have the Harvest Equal Weight Global Utilities Income ETF with a ticker of HUTL. This ETF provides exposure to global utilities company while, of course, using, once again, those covered calls to enhance those monthly dividends. At the time of recording, their price was coming in at $17.83. They have an NAV of $17.45. Those assets under management at $239.88 million. Their beta 0.65, so they're quite a bit less volatile than the market average. Looking at their fees, they have a management fee of 0.50% and their management expense ratio 0.68%. On to their dividends, they have a yield of 7.96%. This is the lowest yield on this list, but I really love this one, so I did include it. This is a monthly dividend of 12.2 cents per share. Their 5-year average dividend increase is at 0. They have not been increasing their dividend, but it has been a reliable payer. On their 3-year, that return on investment comes in at negative 4.14%. Factor in the dividends, 18.61%. On that 1 year, their return on investment comes in at 9.52%. Add in those dividends, we get a total return of 18.27%. Their top 3 investments include Emera, ONEOK, and Pembina Pipelines. This one does also have a leveraged version with a ticker of HUTE. In our almost top spot at number 2, we have the Hamilton Enhanced U.S. Covered Call ETF with a ticker of HYLD. This ETF is designed to provide investors with exposure to a diversified portfolio of U.S. equity covered call ETFs. They also employ some moderate leverage to further enhance their returns. At the time of recording, their price comes in at $13.97. They have an NAV of $14.30. Those assets under management, $615.36 million, and their beta, 0.99, so they're pretty much as volatile as the market average. When it comes to fee, their management fee, basically they'll list it as 0 because it comes in as the fees of their underlying ETFs, but typically it ranges from 0.65 to 0.75. Depending on some of the changes that are happening with those underlying ETFs. When it comes to their management expense ratio, that's a number they're not very transparent with. However, the best guess out there is around 2.64%. Looking at their dividend, they have a yield of 11.596%. So that's a monthly dividend of 14.3 cents per share. And they have not been around for 5 years yet. They're actually around 3 years old. So we do not have a 5-year average dividend increase for them. There is a slight increase over those 3 years though. They actually opened their dividend initially at 13.8 cents and now, as we just mentioned, 14.3 cents. Looking at that 3-year return on investment, that comes in at negative 12.52%. Add in the dividends, total return 15.19%. On that 1-year return on investment, 16.22%. Factor in the dividends, we get a total return of 28.70%. That's not too bad. That's not too bad at all. Their top holdings include Caterpillar, NVIDIA and AMD. As I said earlier, this one does use some moderate leverage, so this one is the leveraged version. In our top spot at number 1, we have the Hamilton Enhanced Multi-Sector Covered Call ETF with a ticker of HDIV. This ETF is designed much like HYLD, but they have a Canadian covered call ETF focus, and they also do use moderate leverage to maximize those payments. At the time of recording, their current price comes in at $17.78, and they have an NAV of $17.95. Those assets under management, $507 million. Their beta comes in at 1.20, so they definitely are more volatile than the market average. Switching to fees, their management fee comes in at 0.65%. Management expense ratio, 2.41%. Once again, you have to take this with a grain of salt, as Hamilton is just not very transparent when it comes to their MER values. Looking at their dividend, they have a yield of 10.771%. It's a monthly dividend of 17.1 cents per share. And their 5-year average dividend increase, that comes in at 3.33%. Looking to their returns, their 3-year return on investment comes in at 8.75%. Factor in the dividends, we get a total return of 39.74%. That's pretty darn good. On their 1 year, their return on investment comes in at 16.44%. Add in those dividends, we get a total return of 28.98%. They do not break down their portfolio by companies. Thus, it is hard to exactly know who their top companies are. However, the 2 ETFs they have the largest stake in are both in the financial sector, so it is a safe bet to assume their top holdings include a few banks for sure. Like HYLD, this one is also its own leveraged version. These 5 ETFs are some very good ones to get that income flowing in your portfolio. Keep in mind that with those leveraged versions I talked about, and that also includes HYLD and HDIV, they will fall a little harder than the others in a down market. So you may want to swap to a non-leveraged version if we head into a bear market. Hopefully not for a while. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on cheap high dividend ETFs for under $15. Thank you for watching, and I will see you in the next video.